Hi, my name's Adam. Welcome to the channel. Welcome to week 3 of building wealth through investing. So today we're going to be talking about investing through a tax-sheltered Tfsa, so tax-free savings account. If you haven't already subscribed to the channel, make sure to do so. We release 2 videos every week. Tuesday's part of our mini series, which we're doing right now. Friday will be kind of a hot topic or a tax strategy or financial planning strategy that we use for our clients that can help you kind of build wealth, pay less tax, and just different strategies that we implement that a lot of Canadians aren't doing on a day-to-day basis. So let's jump into a TFSA. So tax-free savings account is an account that can be used by anyone in Canada or any Canadian 18 years of age or older. Now, some provinces and territories, you have to be 19 years of age to open up the account, but you start building contribution room from the age of 18. So for instance, if you live in BC, you can't open up an account, a TFSA account, until you're 19, but you start building up contribution room from 18. So when you turn 19, you'll have 2 years of contribution room. So right now, if you turn 19 in 2021, when you turn 19, you could open up the account and contribute $12,000 to your tax-free savings account. So the biggest benefit to a tax-free savings account is that the money grows in there. So any gains, growth, income, it's all tax-free. Whether it's a capital gain, dividend, interest income, it doesn't matter what type of income or growth you have in there, 100% of it is tax-free. So at the end of this video, I'm gonna go through a couple reasons why you need to have a tax-free savings account in your financial and retirement plan, and the big impact it can have, and the amount of tax it can actually reduce down the road in retirement. So we use it for our clients to lower their tax bill in retirement without affecting their ongoing income streams. So before I jump into contribution limits for TFSA, I want to be clear that you can have more than one tax-free savings account. So we have clients that might have multiple with us. One might be for shorter term, and the investment approach on that with the portfolio manager might be a little different than their other TFSA, which is for longer term growth. So you can have multiple tax-free savings account, multiple institutions. Just make sure that your financial advisor knows of them all so that it can be part of your overall financial plan. So again, you can have one that's maybe long-term focus where it's invested for long-term. One's a bit shorter-term focus. So again, everyone has a different need for a tax-free savings account, but you can have more than one. So if you have one open and you're looking to open another, that's fine. You just can't go over your overall contribution limit. So what is your contribution room limit for TFSA? So again, it starts to build the year you turn 18. So we'll throw up a graph right now and it just shows you the different contribution limits by each year. So you can kind of figure out what year you were 18. If you're older, obviously you can contribute for all these years that are shown. What's important to know, now to find your contribution room, you can log into your CRA account and click on, if you scroll down, TFSA contribution limit. And it might give you a number. For instance, mine right now says $12,000. The problem with that is that it hasn't calculated my 2020 and 2021 contribution already. So if I just log into there and saw the number, I would think, great, I can put in another $12,000 to my TFSA. But if you hit on your contribution limit and then scroll into transaction history, you want to review, what's been calculated in giving you that number. So make sure that all contributions are triggered there. If they're not, make sure to reduce them off of whatever it says for your contribution limit. So again, mine says $12,000, but it hasn't taken into account the $6,000 I put in 2021 in January, and also the $6,000 I did in 2020. So I know my contribution limit is 0, but it says $12,000. So make sure you go through transaction history within the CRA TFSA contribution limit, okay? So log into your CRA account, scroll down a little bit, it'll say RSP contribution limit and TFSA contribution limit. Click on the TFSA, it'll open up a new page. You can see contribution limit or transaction history. Search transaction history and search from January 2009, when it was implemented, all the way to December 2020 or the end of whatever year you're watching this video. It's going to break down all the purchases and withdrawals you had in your TFSA. Just keep an eye on, make sure everything kind of adds up, but make sure that it's including last year's and the current year's contributions, because oftentimes it doesn't include those. So if you don't see those contributions, remove them from whatever contribution limit is showing, and that's your true contribution room. So just be aware of that. Whatever it says on CRA doesn't mean it's necessarily correct. So just dig into that and look into that properly. Okay, so that was a long summary on how to find your TFSA contribution limit, but we've seen people over contribute because they just look at that number. So I know I kind of rambled on there a little bit, but it is very important to take some time and go through the transaction history to make sure that you're not over contributing. Because remember, if you put too much money into your TFSA, the penalty is 1% per month on over contribution. So you want to make sure you don't over contribute, but you also want to make sure that you get right up to that contribution limit because you want as much money to grow tax-free as possible. So now that we've talked about contribution limit, let's talk about withdrawals. Are you able to pull money out of a TFSA? Well, yes, you are. So if you put money into a TFSA and you pull it out, let's say you have a TFSA of whatever amount, $50,000, and you need $3,000 for whatever it is, emergency spending, travel, whatever it is. You take $3,000 out of your TFSA, you get that contribution room back the following year. And we did a video last week, we'll link it above here, on all the ins and outs of withdrawing from a TFSA. So make sure to watch that video. It's a short video and it explains exactly what happens when you take money out of a TFSA, whether your TFSA has gone up in value or down in value. So we give both examples. So make sure to watch that video and we break down exactly how to treat a withdrawal from a TFSA and how it affects your contribution room going forward and when you get that contribution room back. So how do you invest within a TFSA? So much like we mentioned last week with RSP, a TFSA is basically a special holding account where you can have different types of investment. So make sure to speak to your investment professional on what the best strategy is for you. Like I said, it could be two TFSAs. It could be one kind of shorter term safety, one longer term. It could be just longer term or just shorter term. So just make sure you talk to your investment professional to figure out what the best strategy is for you. But remember, the TFSA is not the investment itself. It's just a special holding account, much like the RSP, in that you hold whatever type of investment fits your risk profile, your tolerance, your strategy going forward as part of your overall financial and retirement plan. We put together a video a few months back on how to build $1 million TFSA. So it's been quite popular. It's grabbed a lot of attention and it will teach you a lot about how I look at my TFSA, how I invest it, how I like to invest it, and how I've actually used mine to grow quite a bit of wealth tax-free within that TFSA portfolio. So again, we'll put a link above to that video. Take a watch through just how I kind of, my mindset around a TFSA and how I use my TFSA and build it to eventually get to $1 million. So it kind of walks you through that whole step. So what are the tax benefits of a tax-free savings account? Obviously, the biggest one, like I mentioned earlier, is all the growth is tax-free, meaning that any income, dividends or capital gains are all paid to you when you take it out tax-free. So there's zero tax to be paid in there. If you put $50,000 into your TFSA and it grows to 100 and you pull it out, that $50,000 of growth is absolutely tax-free. So there's no other way to do that in Canada other than within your tax-free savings account. Now the tax-free savings and RSP, how do they differ? So we'll eventually create a video completely on this because there's a lot of differences that people don't understand. But in simple terms, when you put money into an RSP, you get a tax deduction. So it reduces your taxable income in year of contribution or in a future year. A TFSA, you don't get that deduction. So you put $10,000 in, it's just an investment. There's no tax break up front. But again, that money can grow potentially quite substantially, and you can pull it out tax-free down the road. Whereas RSP, you get the tax deduction up front, it grows, anything that you pull out, contribution and gain, is all taxable income when you pull it out down the road. So they work differently up front, they work differently at the end. The only similarity between the two is they both will grow tax deferred, meaning that year over year, you don't owe any tax on any growth. But again, RSP, your tax, the TFSA, you can pull it all out tax-free. And that runs us into why you need to have a TFSA as part of your financial and retirement plan. So I've talked about this in a few other videos and I will continue to talk about it because I think it's very important as you build up to retirement and enter into retirement to have a bit of a tax-free savings account. So as you enter into retirement, you go from what we call paycheck, earning a paycheck every day, to playcheck. So you got to start paying yourself. And that's a big transition, both emotionally, psychologically, and financially. So we need to start redeeming money out of your account. So that's great. We can create a consistent income stream from the accounts that you have, maybe pension plan, your CPP, OAS, all that, great. But what happens when you need a new roof, when you need a new vehicle, when you have a large expense, $10,000, $20,000, $30,000? If we need to redeem that out of your RSP, it's taxable income, which increases your tax bill and potentially claws back your old age security. So what you want to have is a Tfsa. We would be able to pull money out of your Tfsa, again, tax-free, which avoids any tax due, and it also, doesn't create an issue where we maybe have a bit of an old age security clawback. So you're going to have large expenses or larger expenses in retirement. Those don't go away. So how do you deal with them? Okay, so we want to make sure we have a Tfsa to deal with those accounts, because the only other way to do it would be either to pull money out of your RSP or RIF maybe at that time, or do a line of credit. But now you have debt in retirement, you're paying interest on it, and also getting the line of credit, depending on your situation in retirement, can be quite difficult for many people. So as you kind of build up towards retirement, even if you're 25 now, 45, 55, or you're just entering into retirement, get that tax-free set up. Let's start funding it, because it's a very valuable tool as you head into retirement, even before retirement, but especially in retirement, to have a bit of a Tfsa so that for those larger emergencies and larger purchases, you can pull money out tax-free without building up a taxable bill, or maybe more importantly, clawing back any old age security payments. So hopefully you have a much better understanding of a Tfsa, how it works, contribution room, withdrawals. Again, if you need to learn more about withdrawals, make sure to watch our video that we created on that. Again, we'll link it above right now. But that video on withdrawals will give you exactly the tools you need to how to kind of massage and manage if you need to pull especially larger amounts out of your tax-free savings account. So, and again, make sure to have a tax-free savings account heading into retirement. It's so important. So thanks again for joining us this week. Again, if you haven't subscribed to the channel, please do so. There's so many of you watching these videos that are not subscribers. Join our family, get notifications every week. Again, Tuesday, Friday, we release a new video. So twice a week, we have new content going out that's just gonna help you, save more, retire better, build more wealth, create better tax strategies and all that. So please join our channel. And again, hit the thumbs up if you enjoyed this video, if it helped you kind of build more wealth and get more knowledge around a tax-free savings account. Thanks for joining us today. Have a great day.